Level 1. The video. It starts with a YouTube video. You weren't looking for it. You were watching something else, a basketball highlight, a cooking tutorial, something normal, and it auto-played. A guy in a clean apartment, 2 monitors, a coffee cup. He pulls up a chart. He draws a line. He explains calmly and with total confidence that he made $4,300 before 10 a.m. You watch the whole thing, then you watch 3 more. The language is new, but it starts to make sense. Candlesticks, support levels, the market open, pre-market movers. You write words down on a piece of paper like you're studying for something. You open a brokerage account that same night. Robinhood, Webull, TD Ameritrade, whichever one has the cleanest app. You deposit $500. It feels like buying a ticket to something. You don't place a trade yet. You just watch the numbers move. The numbers moving feels like something. You don't have a word for it yet. You will develop a word for it. The word is addiction, but you won't use that word for a long time. Level 2. The paper trader. You spend 6 weeks paper trading. This means you practice with fake money, tracking what you would have made if you'd pulled the trigger. You are very good at paper trading. Your fake portfolio is up 34% in 5 weeks. You screenshot it. You feel a confidence that is entirely disconnected from reality because paper trading has a flaw nobody warns you about clearly enough. It doesn't cost you anything, and things that cost you nothing teach you almost nothing about how you behave when they cost you everything. You read 3 books. You join 2 Discord servers. You watch the market open every day on your lunch break, phone under the desk, watching tickers scroll like you already belong to this world. Someone in the Discord says paper trading is for cowards, that you don't learn until real money is on the line. You agree with him. You shouldn't agree with him. But you do. You deposit another $2,000. Level 3. The first real trade. You buy 50 shares of a stock you've been watching for 2 weeks. A tech company. Earnings coming up. The chart looks right, or what you've decided looks right after 6 weeks of YouTube education. You place the order at 9:47 a.m. market order. You don't fully understand the difference between a market order and a limit order yet. You will understand it shortly. The stock drops 4% in 11 minutes. You hold. Everything you've read says don't panic, sell. So you hold. You refresh the page every 30 seconds. You eat lunch standing up because sitting down feels wrong. You check it from the bathroom. You check it walking to your car. It closes down 6.2% on the day. You lost $93. $93. You've lost $93, and it feels like a physical thing, like something removed from your chest without anesthetic. You sell the next morning for a total loss of $118, including fees. You open a spreadsheet and log the trade. Entry price, exit price, reason for entry, what went wrong. This is the right thing to do. You've read that the best traders journal everything. You will keep this spreadsheet for exactly 11 days. Level 4. The first win. 3 weeks later, you make $340 in a single morning. A biotech stock spikes on FDA news. You've been watching the sector? You got in early, set a target, hit it, got out. Clean. Exactly the way it's supposed to work. You call someone about it. Not because they'll understand they won't, but because you need to say it out loud. You made $340 before noon, on a Tuesday, while other people were in meetings. This is the most dangerous day of your trading career, and you have no idea. Because the win feels like confirmation. It feels like proof that you understand something other people don't. It feels like the beginning of something. What it actually is, statistically, is noise. One good trade proves nothing about the next one. The market doesn't know you won. The market doesn't know you exist. But your brain has now connected the action of trading with the feeling of winning. And that connection will cost you more than $340 before this is over. You increase your position sizes. Level 5. The hole. You lose $1,800 in a week, not in one trade. Across 9 trades, each one slightly wrong in a different way. You bought too late. You sold too early. You held through a stop loss because you were sure it would bounce. It didn't bounce. You averaged down on a losing position because a guy in the Discord said it was a good entry point. It was not a good entry point. You don't tell anyone. This is the thing about losing money that nobody in the YouTube videos explains with enough weight. The secrecy. You are sitting across from people at dinner, and they are talking about normal things, and inside you is a number, a red number, a number that is the distance between who you told yourself you were and what the market has decided you are. You deposit more money to trade your way back. This is called revenge trading. You've read about revenge trading. You've read that it's one of the most common and destructive mistakes a trader can make. You do it anyway. You lose another $600. You close the laptop and don't open it for 5 days. Level 6. The system. You come back. Most people come back. This time, you build rules, an actual written system. You will only trade the first 90 minutes of the market open. You will never risk more than 2% of your account on a single trade. You will walk away after 2 losses in a day. No exceptions. You tape the rules to the wall next to your monitor. This feels serious. This feels like the version of yourself that is going to make it work. You follow the rules for about 3 weeks. Then, a setup appears that doesn't quite fit the rules but feels right. You know the feeling. You've had it before. You take the trade anyway. Sometimes this works. When it works, you tell yourself your instincts are developing, that experience is starting to override the rigidity of rules. When it doesn't work, you retape the rules to the wall and start the count over. After 8 months, your account is down 22% from where you started. This is better than most. Most retail day traders lose more. The statistics on this are not hidden. They are published, cited, repeated. Around 80% of day traders lose money. Around 90% quit within 2 years. You know these numbers. You have known them since week 1. You have decided you are in the other 10%. You have not yet decided this based on evidence. Level 7. The obsession. Trading is now the first thing you think about when you wake up and the last thing you think about when you sleep. You check futures at 6 a.m. You scan pre-market movers over coffee. You have a watch list of 40 stocks, and you know each chart by shape, by recent behavior, by what it did the last time the sector moved. This is real knowledge. You've earned it with time, but the knowledge has a cost that isn't measured in dollars. Your attention is somewhere else now, always slightly somewhere else. At dinner, your phone is face up. At the movies, you are calculating whether you should have held the position you closed at lunch. You are present in the room and absent from it at the same time, and the people around you have started to notice in ways they don't say directly, but that you can feel. You take a day off from trading on a Saturday and spend most of it backtesting a new strategy. You don't notice you've done this until 4 p.m. The market is a language now, and you think in it constantly. You look at a gas station and think about oil futures. You hear inflation mentioned on the news and start mentally mapping sector rotations. The world has become a chart, and you are always reading it. You're not sure if this is discipline or something else. Level 8. The reckoning. You sit down one Sunday and do the math. Real math. Full picture. You add up every deposit, every withdrawal, every fee, every tax event. You calculate the hours conservatively because you don't want to know the real number. You compare what your account is worth now versus what it would be worth if you had put the same money into an index fund and never looked at it. The index fund number is higher. This is not a small realization. You've given 2 years of mornings, weekends, attention, energy, and a passive investment that required nothing from you would have returned more. You sit with this for a while. Some people quit here. They close the account, move the money, and don't look back. They tell the story at parties as a lesson, as something they tried and survived, and eventually it becomes funny the way things become funny when enough time has passed. Some people don't quit. They've seen enough in their own data, in their improving consistency, to believe the next chapter is different, that the losing was tuition and the learning was real, and the edge they've built is finally actually starting to show up in the numbers. The math alone can't tell you which person you are. Only you know that. And sometimes even you don't know yet. Level 9. The other side. This level is not guaranteed. Most people never reach it, but some do. After 3 years, something changes. Not dramatically, not a single trade that changes everything, not a strategy that unlocks the code. It's quieter than that. Your losses get smaller. Not because you're luckier, but because you cut them faster, without the internal argument you used to have with yourself about whether to hold. You stop trading out of boredom. You stop trading to recover losses. You stop trading setups that aren't there just because the market is open and you're sitting in front of it. You make $2,200 in a month, then $1,800, then $3,100. The consistency is new. It doesn't feel like luck in the way the early wins felt like luck. It feels like something you built slowly at a cost you'd rather not calculate. You are not rich. You are not on YouTube showing your account balance. You are paying some of your bills with money the market gave you, and you are doing it with a steadiness that took years to find. Nobody outside this world understands what that took. You've stopped trying to explain it. Level 10. The screen. It is 9:28 a.m. You are at your desk, same desk you've been at for years now. 2 monitors, a coffee cup, a watch list you've trimmed down to 12 stocks you know better than most people know their coworkers. The market opens in 2 minutes. You don't know if today will be green or red. You never know. Anyone who tells you they know is selling something. You've learned to be comfortable not knowing, to operate inside uncertainty without needing to resolve it, which is a skill that sounds simple and took you longer to develop than anything else. You've lost money in this chair. Real money. Money that hurt, money you didn't tell people about, money that changed the way you thought about yourself for longer than you'd like to admit. You've made money in this chair too. Quietly, without the cars or the watches or the second monitor pointing at the camera that the YouTube version of this life requires. The bell rings. The charts start moving. You watch. You wait. You've learned that the waiting is most of it. Somewhere, someone just watched a video of a guy in a clean apartment making $4,300 before 10 a.m. They're opening a brokerage account right now. They have no idea what's coming. Neither did you.